Scratched back, folks. At its low, it had been down about 163 points. Right now, you do have it down just about 50 points or so. Let's call it 44 now. It's changing as we speak. So as we're watching all of this and more, I want to thank Andy Brender and, of course, John Sylvia. Folks, keep your eyes on this market. It is moving fast, and it is having gone down pretty dramatically. I mean, look at this. For the Dow, down 478 points. We are cutting those in more than half here. We're down about 201. Let's get to the guys who are in the thick of the trading action on the trading floors. Let me get to John Corpina at the New York Stock Exchange. What are you hearing? What are you seeing? And what are you doing?
You know, Liz, there was quite some reaction here that we got from this announcement, right? The Fed comes out, we watch it all on the news, we're watching your channel as to what's going on, and then once Powell spoke, immediately his words just started to snowball, and you get these computer programs that start reading the headlines, and next thing you know, the market tumbles down. And it takes a while for it to kind of wash itself out. Did the market react appropriately? I think it did. I just don't think it should have reacted as much as it did. So right now, it looks like we're starting to claw back in. I think investors are waiting for the close, waiting to see what's going to happen. I mean, look, we've cut everything in half. Russell's still up. VIX should have moved much more than it did. It hasn't. So I think right now, I don't think everyone's really convinced that this is a big turn in the market. We do have a few more days, obviously, left to go in this session. End of the in this week, end of the month today. That might add a little bit more volume to the end. That might dampen some of this liquidity.
Alan, we're looking at the VIX because, as John pointed out, we did see a spike, but not the move that he would have expected. We're up about 3%. The VIX, of course, indicates a little bit of fear in the market. What are you sensing from the flows and from the calls you are getting at the CME in Chicago?
Well, we still have the VIX at a very low level. Let's remember it was last week that we are at the lowest level in that fear factor since April. But I want to point out that it's really important that the markets had it completely right today. There was all the talk, the half point versus quarter point. Obviously, everyone knew there was going to be a cut. So if we look out, you talked about September has a 70% chance of another cut. That's what the markets are telling us. More important to me is December. December's got a 50% chance of another cut. So it's priced into the pipeline. That's what the market's saying. The markets have been right. We kind of live in this bizarro world now where you're seeing that we're cutting rates because of the certainty of cutting rates, because of the uncertainty in the trade policy. So it's kind of a self-fulfilling prophecy that the president wants rates cut, and we have this uncertainty so the Fed feels that we have to cut rates. So it's going to continue, but I still look at this, even a tiny pullback we've seen today, as opportunity. I'm still seeing the markets move a lot higher. This stresses the one thing that the chase for yield, people are still going to be going into equities. It's not going to pay to be in treasuries, especially at these rates.
All right, we're back above 27,000 for the Dow, just by 1 point, though. 27,000, 1 point here. Financials are a mixed picture. But Luke Rabari, if you look at things like, I would say insurers, all red. The Chinese stocks that trade here, all red. It has been a very rough 48 minutes since he started speaking here. So I'm beginning to wonder what you see there. And here the insurance stocks now, they have reversed their back up at the moment. What do you think is the investment play here?
Well, great question, Liz, but it doesn't matter how unfair the world is or whether I think there's 4% inflation and Powell thinks it's negative or whatever. But a question you asked earlier, look at the VIX. Look at how low it is. If you're going to be in risk assets, if you're going to be in equities, you should own some volatility. You should own it hedged because you don't know what's going to happen. But the market at all-time high, volatility all-time low, you should own some of that. And I tell you another thing, the Fed is painted into a corner. And as I've said to you in this show, for about a year and a half, there's not going to be any deal with China. President Trump just picked up the narrative that maybe the Chinese are waiting to see how the elections are going to go. He said that about 2 days ago. So I think they're going to wait it out. There's not going to be a deal with the Chinese, and then the Fed is going to have to act. It's going to have to follow the EU. And your simile about a patient with painkillers is exactly what's going on.
Well, thank you. I don't know. As a doctor's daughter, I always revert to the patient, what medications work or work and then stop working. John Corpina, can we throw up some of the metals stocks, everything from BHP Billiton to gold, GOLD? I'm wondering, as we saw before this rate cut and then the Q&A, gold was down $4. Then it went down $14. John Corpina, clearly we do have a situation where the market's interpreting that this is stocks negative and metals negative, which is weird because gold usually is a flight to quality. Can you interpret, kind of play psychiatrist for traders and investors right now?
Yeah, you know, that correlation, which usually is there, is not there at this point, which just shows me that investors are just so disconnected to the market as to what's really going to happen. As your previous guest just said, talking about a trade deal. We have a big meeting next week, and we're going to get no information out of that. We're fooling ourselves if anything's going to happen. So investors really don't know how to play this at this point. Unfortunately, this was a date on our calendar. Next week is a date on our calendar, but neither one of them are really going to lead us to how we should play this next month or 2 months down the road. But at this point, I think we have to stay that overall our economy is strong, sentiment is strong, and equities is the right place to be at this point where you're going to see the best value.
Yeah, or the dollar. Howard Lutnick of BGC Cantor Fitzgerald says you got to go into the dollar. That was a right play, certainly, if you went in yesterday. John Allen, Luke, thank you so much. We're looking at a Dow Jones Industrials down 241, but remember, we had been down 478 points, and those markets did hit session lows not only after the 25 basis point rate cut announcement by the Fed, but it was more during that Q&A with the financial press. And the Fed, of course, also halting its balance sheet unwind 2 months early. It was supposed to end at the end of September. Jay Powell and company say, no, let's quit it now, because that is in its own way a stimulative move. Look at the Dow move here when we started to tank, and this was